What is going on, guys, and welcome back to the Young and Intelligent Money Investing channel. Today we are starting up a little bit of a new series, and this is going to be the $0 to $10,000 challenge on the Robinhood app. While I know a couple other channels do this series, I'm going to put my own little spin on this and have it be $0 to $10,000 on the app and 0 to 10,000 subscribers on YouTube. So that way, it can be a little bit of exciting. I know a lot of you guys are other content creators, so this way I can give a little bit and show what I'm doing on the YouTube end as well as what I'm doing on the investing end, and that way it's kind of a hybrid between my two audiences, which are people wanting to watch about YouTube and people wanting to watch about investing and growing your money. Both are great ways to get some money, have a good hobby, kind of just grow over the long term. So I think this will be a great series, and I want to know what you guys think down below. So if you like this video idea, series idea, please drop a like down below and leave your thoughts in the comments. Alright, let's get into this. So we're going to do a quick rundown of the portfolio, how it's performed so far, how much I'm up, and to begin with. So as you guys can see right now, I am up 14.73%, up $589.19. It's been fluctuating. Today's been a pretty bad day, but we've peaked up about $620. As you guys can see, I pretty much started at just about 4,000. I think it's like 2 cents under 4,000. So this has been great growth so far, and I expect this to be a relatively long journey to get to 10,000. Although I plan to invest more and more money as this year goes on, so we might be able to hit $10,000 this year. I definitely don't expect to hit it anytime soon simply off of equity returns, just because you guys know I like those safe investments. I don't want anything that's going to double or half in just a couple months. I want safe growth over the long term, and I think that's going to give me the best returns. So let's start looking at my positions. We'll look at my total equity to start. So let's start with SPY. SPY, you guys know, is a S&P 500 ETF. I am up $159 on this position, 16.5%. And while I do like SPY, I would definitely recommend going with VOO instead. This is simply due to the expense ratio, 0.07 versus 0.04. That 0.03% difference is going to make a change in the long run, even though it might not seem like much. When you're talking about VOO, this is just 4 cents for every $100 that you have invested, which is extremely cheap when it comes to an ETF. Next is going to be DIA. This one's going to be Dow Industrial Average ETF. I'm up 22% on this for about $48. 2.1% dividend yield, and what a lot of people don't know about this stock is that it gives monthly dividends. That's one of the really big reasons why I like DIA. It's the only huge ETF of one of the main indexes that I follow, that most people follow, that gives monthly dividends. SPHD is another one that gives monthly, but it is not like a main thing like NASDAQ or S&P 500 or the Dow. So that's just a really good one. Follows the S&P or follows the Dow Industrial Average, but it does have a little bit higher of an expense ratio due to that monthly payout. Now we got QQQ. Now this is going to be following the tech stocks, and it's another ETF, 1% dividend yield, and I've gotten some solid growth off here, about 15% in not that long of a time. Definitely recommend those ones. These ones are just your major industries, indexes, definitely ones you want to have in your portfolio for the long term. SPHD, you guys know this is the low volatility, high dividend yield, pays out monthly. This one's been lagging the S&P 500 a little bit as of late, only up 6.13% on this position, but it does give out that monthly dividend, so it's great to see. VYM is the newest addition. This one's high dividend yield Vanguard ETF that excludes real estate investment trusts, so I'm really excited about this one. Up 0.8% so far, but I've only had it for a few days. OUSA, this one's another ETF, monthly dividend ETF. It's the Kevin O'Leary O shares. It's a dividend yield ETF, but it has a really high expense ratio, so I would not really recommend this one. I just bought it because I thought it'd be fun to be in the Kevin O'Leary ETF. I did get to meet him. I watch him on TV all the time, so that one's interesting to me. SDIV, this is the Global X Super Dividend ETF. Has a really high dividend yield at 7.8%, and I'm up 4% on the position, which is great. Pretty much all I'm looking for in this one is to stay flat on equity value and get those dividends every single month. You guys see I get about a quarter a month from my 2 shares. Now we get into the actual stocks. We're past the ETFs. Berkshire Hathaway. I'm up huge on Berkshire. I really like Berkshire. I'm up 22% on it. I really like Berkshire because of its investment philosophy. It's a philosophy that I try and copy for my channel, or not my channel, my own portfolio. So I really like this one for the long term. Even when Warren Buffett's not there, I think they're going to keep that same conservative investment philosophy, and that's really what's going to pay off over the long run, even if they miss short-term trends that people are chasing. ADBV, you guys know this is the pharmaceutical spinoff from Abbott Laboratories. It's considered a dividend aristocrat because of that Abbott Laboratories. I'm up 60% on this position. This is easily my highest percentage that I'm up $80. Bought 2 shares of it when it was at $66. Now it's at $106, which has just been absolutely fantastic for me. Been collecting dividends along the way with it, so this one's been a great buy and hold for me over the long run. A lot of people would have probably told me to sell off because I was up so big, but because of my philosophy of just buying and holding for the long term over the ups and downs, I held on, and it's really paid off, especially as of late, as it's shot up to about another $5 or $6 recently. Apple. You guys know I say to hold Apple, don't trade it. Just buy this one and hold, and even with all these fluctuations, it has just paid off tremendously for me. I'm up 15% on the position. I have been receiving dividends. I think this thing's going to keep going through the roof. I'm hoping it hits $200 this year. We will see. I still believe it's going to be that first $1 trillion company. American Tower. Okay, you guys might not know about American Tower. It's not quite as known. I've talked about it on the channel before, but what American Tower is, it's a cell phone tower company, and I think that's technology that's going to be around for a really, really long time. I don't see it going anywhere. And this company, even though it's American Tower, is expanding internationally. So especially when these like lesser markets are getting more and better technology for cell phones, wireless calls, and that gets more and more popular, this company is just going to keep growing, keep growing, keep growing. And with the Sprint and T-Mobile merger being off, there's now higher competition in that market with its 4 highest clients, which are Sprint, T-Mobile, Verizon, and AT&T. This is a stock I like for the long term. It's a REIT, so we know the higher interest rates these days are not great for the REITs, like the rising interest rate environment, but I'm going to hold it anyway. It's a cycle, and I'm sure in the next decade there's going to be higher interest rates, lower interest rates. Like you never know what's going to happen with the economy. You just kind of gotta buy and hold, in my opinion. Pepsi, you guys know PepsiCo. We're up 3% on this. Hasn't done great for me. Overall, I see a good amount of growth for this company just because of how diversified it is. It owns a lot of different companies. It's not just stuck in beverages, because we know less and less people are liking these sugary, caffeinated drinks that are pretty bad for you. It's also in snacks. It has different juice companies, waters. So I definitely like how diversified they are, and that's why I'm in Pepsi and why I sold off Coke and I'm keeping them. So, Realty Income. This is a monthly dividend company, and they call themselves the monthly dividend stock. 4.2% dividend yield. It's recently just been battered over the last month-ish, down 3% this month. I'm down 2.3% overall, but I'm probably up on the position due to my dividends that I've received. I sold off half of my position a little while ago for a profit, and now I'm down on the position, unfortunately, but I'm sure it'll come back. That's a buy and hold for the long term. SUI, Sun Communities. This is a manufactured home communities stock, and I really like this space, largely due to their high retention rate of their clients. I'm down on it because down 3%, largely due to the high rising interest rates. That's okay. I think it'll come back in the long run. But with these manufactured home communities, once people move their houses there, they don't want to pay to remove them because it's an expensive process. So there's about 95% retention rate in their clients there. So that makes it a really interesting space. I know I'm really good family friends with somebody who's been incredibly successful in the same space. So that's one of the reasons why I want to be a little bit invested into it. I think it's going to keep rising and rising as people realize that the manufactured home space is not like a slumlord type thing. It's more of a lower working class community of people who pay their bills and are also staying in those communities, and I think they're going to have a lot of success over the long run. Now we got Microsoft. You guys know Microsoft. I'm up 28% on my position there. Has been absolutely crushing it this year, and in the last year or so since I've been holding it. Let's check out its 1-year return. Up 50%, absolutely incredible. I think it'll continue to trend in that direction. Starbucks, I believe. Oh, I'm down on it now today. Starbucks took a huge dip. Yeah, I was in. I bought in here. Then I bought in a couple more shares. Then it went all the way down to low 50s. Now it's starting to come back. I think Starbucks will end up having a solid year. Hopefully, it's been expanding a lot, but it's starting to see more competition from places like McDonald's and stuff offering really low price coffees. That's all right. I think it'll still grow in the long run as it goes more international, and I think it'll be all right. So Stag's an industrial REIT, so they do a lot of warehousing and stuff for many e-commerce plays and stuff like that. It's another monthly dividend stock, and it has a almost 6% dividend yield. I'm up 2% on the position, but I've been getting those dividends every month since I've owned it. Bausen, this is more of a speculative tech play for me. They're really big partners with Alibaba over in China. I don't know that much about the company in general. It was a big recommendation to me by a trusted investor, so I decided to hop in. They're up 160% in the last year and 255% in the last 5 years. So they've been crushing it lately, and I expect that to continue in the future, hopefully. If not, all right, I only have $32 in it. Now we have Apple Hospitality REIT, last one on this list. I'm up about 5.5% on it. Been getting monthly dividends. This is a hotels REIT, so lodging, not a huge play, but I really enjoy it. So that's the portfolio right now. I plan to keep putting money into this and also keep making more investments. And I think I'm going to be primarily focused on ETFs going forward, because that's more the safe plays, and that way I don't have to go and do the individual stock picking game, even though I'll do a little bit of that because it's more entertaining for you guys, and I'm be happy to say suggestions down below. Now let's check out the channel really quick. Let's pop up our social blade. I've got this right here. Here's the channel. We've been absolutely crushing it lately on the views, the subscribers, everything like that. I was expecting to maybe hit 1,000 subscribers this year, but over the last month we've about almost doubled. We've almost made it to 500 subscribers. I'm hoping to do that sometime this week, and that'll be a big milestone for us. I'm hoping to hit 1,000 in the coming months, and then maybe 5,000 this year. That's my big goal, but we will see how that goes. Let's check out our analytics right now. All this loads up. I just want to thank you guys for all the support we've been getting. It has been so great with all the new subscribers on the channel. Please drop a like down in the comments and a comment if you can. That'd be absolutely awesome. So, as we can see here, we're up 7,000 views in the last 28 days, 16,000 minutes of watch time, 216 new subscribers, and 1855 of revenue. So, I'll be happy to keep you guys updated with this. I'm definitely going to do a revenue breakdown for the month of January coming up soon, and even though this revenue is going to go away relatively soon with the February 20th, I kind of want to show you guys what the possibilities are for a channel like mine, because 1855 of revenue with my views and everything like that is pretty good, especially with what we've been doing lately, and especially with that January slump we were talking about earlier. So I hope you guys have enjoyed this video. Please drop a like, comment down below, and subscribe if you haven't already. I will see you guys in the next one. Thank you.